Welcome to the Insurance Producers Podcast, where we bring you the top personalized producers, insurance agents, and industry partners, giving you at least 3 takeaways to 10x your production and build your multi-million-dollar revenue books. So sit back, relax, and become inspired by the success stories and strategies of the world's top insurance minds. Let's roll. All right, everyone. Welcome back to the Insurance Producers Podcast. I am your host, Cyrus Jaffery. We have a special guest today. This guest was very important to me last couple of months as we've got to know her. Man, she's been really good to our agency, and I'm excited to introduce you to all the insurance agents and producers across the country. So I want to introduce you to Krista Paulus with Security Financial Bank. How are you?
I'm good, Cyrus. How are you? Thank you for having me.
Yeah, happy to have you. So Krista and I went through a transaction recently, and we acquired an agency. I reached out to Krista. I've known Krista for a couple of years, and she basically just kind of held my hand and got me through the process, and it got me closed in the time frame that we talked about. I mean, it was an amazing experience, and I wanted to bring her on to just share a little bit about all the producers, all the agency owners that are going through some acquisitions. And I know that's going to get really big here in 2025. It was pretty big in 2024 as well. And what to look for. What are some things that you guys should be doing to get yourselves ready to go for us and her firm? They do a ton of these, and she was able to share. But before we go into the meat and the potatoes, Krista, if you want to just maybe share just a little bit about us. How long have you been doing what you're doing, and how you got there and where you are?
Sure, absolutely. So I have been in the lending realm for 28 years. Wow. That sounds crazy. I know I only look 30, right, Cyrus? But yeah, I joined lending right out of college, and nobody plans on being a banker, but guess what? I landed in that and have stayed there ever since. Been with Security Financial Bank now for just over 7 years. And about 5 years ago, Security Financial Bank decided to branch off into this realm, which is the insurance agency realm, of, doing financing for insurance agencies and making that a specialty niche for us. And they put me on that team as somebody who would be able to go out and bring in new business, meet with insurance agents like yourself, hopefully forge a relationship and look forward to helping you guys grow in that aspect. So
that's awesome. Very well said. So, Chris, I'm just curious, like what excites you about the acquisition loans? Like what would you say?
Is there anything exciting about banking, Cyrus? Let's be honest. No, just kidding.
Yeah, I can see that.
No, what excites me is watching my clients grow and expand, seeing them reach their full potential, and being a part of that journey. I really enjoy watching them grow and develop and be all that they can be.
Absolutely.
Yeah.
No, I mean, I could kind of attest to that. Me and Krista were talking regularly on the daily, texting, calling, trying to figure out this acquisition, and I think that's one of the things that I wanted to go over was what is I guess I'm going to call you Krista's way, because I mean Security Financial has their own obviously rules and regulations and all of that stuff, but like my relationship was Krista. Like that's all who I know, to be honest with you. I actually had to go look at the name of your bank because I knew Krista, because Krista is my relationship, and we're in the insurance industry and we're a relationship business. The clients know Cyrus Jaffery. They really don't know who they're with, Nationwide Travelers and all that stuff, obviously, because they trust us, right? I kind of trusted you. So from a trust standpoint, right? Like, a lot of people want to make sure that they work with somebody that's reliable, obviously backed by Security Financial Bank and all of that stuff. But what do you do, I guess, when it comes to when you meet an agent, when you meet a producer, do you want to build that relationship kind of like right away? You're testing the waters a little bit. Is this a good fit? Is this a not fit? Maybe later on you keep in touch with them. Like what's your communication right away and then like long-term look like for you?
Yeah, and this is true with a lot of our clientele, right? You meet somebody, you have a conversation, you get to know them, right? You learn about them before you really learn a lot about their business, and I think that's important. Also asking about your business. What got you into this industry? Why are you
Mhm.
excited about insurance? If that's if that's a thing, Cyrus, like being excited about banking. Um, and then every person I work with has my cell phone,
Yeah.
every single one. And that's important to me because I want to make sure that they're able to reach out to me in whatever capacity is easiest for them, whether it's via text, email, or just picking up the phone and giving me a call. And I always try to get back to somebody within 24 hours at the longest, if at all possible, because I don't want somebody sitting there wondering, okay, I reached out to this person 2 days ago and they haven't answered me yet. Why is that?
Mhm.
Even if it's just to touch base and say, I'm still working on that. Sorry, don't have an answer for you yet, but I'm going to get back to you.
Mhm.
Hang tight, just so you know that there's no like stagnant period there. And Cyrus, I think you know through our relationship, you said it was a couple years. It was, and sometimes a lot of these relationships take that long to forge and build. And I believe I reached out to you several times within that time period,
Mhm.
just checking in. How
Mhm.
are things going? Are you still,
Mhm.
looking at growing and acquiring other agencies? And I think that's important because then they know, hopefully, that you have somebody you can trust, right? That will be there.
Yeah, and I think that was so important to me because like it wasn't like we just met one time and the numbers made sense, boom. And I'm sure it takes a little bit of time for you to know your buyer. Like yeah, you can maybe qualify, but like if you're like in the teeter tottering between maybe, maybe not, that relationship could be the deciding factor. Like, hey, I know Cyrus, I know his business model, I know what he's able to do. I think I can vouch for him to go ahead and obviously go through this loan, which I think is why because a couple of deals I brought to you, it didn't work, right? A couple of things didn't work for us, and we talked about it. We said, listen, it's just not the right fit for us, or it doesn't make sense financially for you and I, or whatever the math makes sense on it. And I think that was so important for us to get to know each other, and I could attest to that you did reach out all the time, and it was really good at the end when I went to you. You said, hey, this one makes sense. Let's do this, and then it was closed within a month. So
Good.
that was pretty awesome. So I guess I want to go to the loan basics. Like, what are some misconceptions, Krista? Like, what are some misconceptions when it comes about insurance loans?
I think a lot of people, when they're in like your position, or even somebody who is newer than you were when you first came to us, right? Thinking that, there's this agency out there I'd love to buy, but gosh, nobody's going to help me do that,
Mm.
right? I think that fear, that doubt in the back of their head is the biggest thing that keeps people from moving forward. So I think the biggest misconception is don't be afraid to reach out, ask the
Mhm.
questions. We'll help you get set up to be in that position when you're ready to pull the trigger to buy something. So use us as a resource. Just because you're not going to necessarily take out a loan tomorrow with us, we're happy to be here as somebody that you can just bounce ideas off of. We can just talk you through your balance sheet, walk you through what you might need. Some other misconceptions are that they need a huge cash down payment. That's not always the case.
Mhm.
Actually, in most cases, that's not true at all. So, just talk to us so we can walk you through those, make sure that you are given the right information to make the choice that makes sense.
No, that completely makes sense. Makes sense to me. And I guess I want to just for people to understand. Like it doesn't for you to just go through that like financial analysis from Krista and her team for her to kind of look at your balance sheet, look at your P&L, look at your 3 years of tax returns and stuff. She's able to kind of tell you, hey Cyrus, like here's where you need to be. Here's where you are. Then you kind of have a target to go to if you're not there. Or if you're there, you're able to say, hey, listen, the math makes sense, everything makes sense, the other side makes sense. I think we're able to submit. She wouldn't just tell you to, hey, go ahead and just submit and all that stuff, and then we'll see kind of what happens because nobody wants to go through the process for 3-4 weeks and then say, sorry, my underwriter declined. Right? So what is your because this is what worked for me because I was always like, is this going to be okay? Like she's talking to underwriters. You had a pretty good idea whether this file was going to close or not. So what's your process when somebody comes in and says, I want a loan? Could share as much as you can, I guess, because you really can't dig deep into it from like a start to finish. What's that process look like?
Yeah. So first off, we have the conversation, right? What are you looking at doing? Why are you looking at doing it? Does this make sense? Then secondly, normally what would happen is I would just send an email with a secure link to upload some information that I can review. It can start as little as year-to-date financial statements, right? A year-to-date profit and loss, year-to-date balance sheet, and go in depth as full tax returns for the last 3 years, and end of year financial statements as well. But if you want to, just get an idea, that year-to-date information and a personal financial statement is really all we need to just take a quick look, give you some kind of an assessment. It's not going to be, it's not going to be all the information. So we're not going to be able to give you a yay or no, nay, but let's move forward, or let's pump the brakes for a second and let's talk about this.
And then, okay, so step one would be, does it make sense? Step two would be review, upload. And you're like, hey, this makes sense. You've got all the documentation. What would you say number three would be, like pull credit and stuff and like kind of get it to an underwriter?
Yeah, I think even prior to that, even to me, like shipping it to an underwriter, the first thing I want to do is talk about structure. So what I would do is put together a loan proposal that kind of outlines what we're looking at. So that would give you some basic terms. It's not, again, going to be set in stone, but it's something that you can look at and say, I'm comfortable with this. Let's move forward. And that loan proposal would include estimated loan amount. If there's cash that needs to be injected or equity that needs to be injected, that would be included in there as well. How long of a term we're going to be able to go on your loan, so you know how big your payments are going to be, and an estimated rate and estimated fees associated with the loan. So it's something that we can go through so that we're both on the same page if we're going to move forward. This is kind of what the loan's going to look like. Okay. Comfortable with that? Great. Now let's push it through to the underwriters and they'll start pulling credit.
Step pulling credit, underwriting goes through underwriting. So step four is underwriting. Structure is step number three. And then step five would be underwriting. We'll have some questions, get all that stuff figured out. I would imagine after then the underwriter approves it at that stage, or she says, hey, I need this or that, which you came to me and said, hey, can you send me this, and this, because underwriters are looking for. And then step six at that point, then the underwriter says, hey, thumbs up. Then I'm assuming you're going to closing.
Going to closing, you're getting a checklist of items we need to close. Now that's a very straightforward one right there, Cyrus. Now in the middle there, depending upon the size of the deal, right, we've got to get an evaluation on your book of business.
True.
So that is a lot more information that we need to gather in order to get that full evaluation on not only your book of business, but the book that you're purchasing.
Perfect.
So now you're going to have to be going back to the sellers and asking them for some financial information as well, which hopefully you've already done because you're going to want to know what you're buying into, right? And then we'll get that off to somebody to do a full evaluation.
Which obviously with our organization, you did a full-on evaluation for us. Would that happen after the underwriter comes back and says, yeah, we probably should, or is that every case is that way, or how does that go?
No, we generally, once you've agreed to the proposal, I get it to our underwriters and they kind of look at it and go, okay, I'm feeling comfortable with this so far. Then we're going to order the evaluation simultaneously with them doing their full underwriting. So we're not wasting any time there.
Yeah. Okay, perfect. And what's that? So for people that don't know, people that are actually looking at other loans from a bank standpoint, because when I look at basically an agency that falls into my desk and says, hey, do I want to buy this or not? There are certain things that I look at, right? What are some things you guys are asking me to bring for the other agency if you're going to do that? What are some things you're looking for? Book of business premium, revenue, household members? Like what are some things that you guys are asking for?
Yeah, so we actually have a full checklist of items that the selling agency is going to have to complete, which includes who their carriers are, right? How much they have versus in individual policy versus commercial policies, how much, Do they have all of their business in trucking? Right? All of that kind of stuff makes a difference. Then yes, what their gross revenue is, what their net profit is, how many employees they have, all of that. And if anybody in your agency currently owns a piece of your agency, that's a really big piece too, because we need to know if there are other agents involved and maybe they have 10%, or if they're strictly commission based, or how that's all structured.
Yeah. Okay, so I got this down. This is super easy. Step 1, does it make sense? Call. Step 2, review all the information, upload it into your platform so you guys can take a look at it, almost up to like a 3-year tax returns, but individually from the beginning, it's just a couple of small things. Step 3 would be like a loan proposal and a structure. After you look at it, run it by an underwriter. You're like, hey, here's what the loan would look like. Here are the payments and all that stuff. Step 4 is going to be going to a full-on underwriting approval where credit is pulled. Do you guys really feel comfortable with this? Step 5 will be you order an evaluation on the evaluation. Will have some steps inside of itself.
Correct.
That I was talking to another gentleman who was doing the valuation. He had a bunch of questions and a meeting with me to go over all of that stuff. And then step 6, after that valuation comes in where you need it to be, what you're expecting it to, and then step 6 is closing.
That's it.
I mean, that's it. Hey, it's as easy as that, guys. Come on.
Easy as that. Let's do it. Give me a call.
there's only 6 steps. This is too easy, I guess what are the biggest challenges? Let's talk about that real quick, right? Like, what are some big challenges that the borrowers face when it comes to acquisition loans in the independent insurance agency side?
I think the biggest challenges is just from their perspective. If they own an existing book of business, right, and they haven't built up that business to a place where it's solid enough to give itself enough value to lend to a down payment on the new book, that can be a challenge, especially if they don't have a ton of cash reserve sitting in there, right? Some of the other things I think, like I mentioned, is just how much they have in right now. I think it's a big thing with personal lines versus commercial lines.
Yep.
Some of the carriers, from what I understand, are having little issues with agencies that have all personal lines. So, we do look at that percentage. And also if your concentration is all in one industry, that's something that not only you as a business owner, of course, are looking at and wanting to make sure that you're diversified in that, but something that we're going to look at as well to make sure you're going to be around in 20 years. Make sure that things are flowing in the right direction. So.
Love that. And what advice would you give? Because a lot of people are going to listen to this podcast, maybe be first time people that are like, I'm really interested. I've never done it. What would be like a piece of advice maybe you would give to people that are doing their first acquisition? And I know you shared a couple earlier. Anything else that you want to share to a first time acquisition agency?
Yeah, talk to somebody. Talk to another insurance agency that's done it. Maybe don't share with them who you're looking to acquire, but just ask them how it went. Ask them how they prepared for it. Any hurdles that they may have seen from your side, Cyrus. Maybe you might be a good resource for somebody to say, what did you stumble upon? What did hurdles did you have to jump through, just so that they're a little bit more prepared. And then just reach out to somebody who can walk you through it. Somebody who's happy to talk to you about it, preferably Security Financial Bank.
Yeah. Absolutely. They're my favorite. You know that. So are you seeing, as far as trends go in the acquisition side of things, are you seeing a lot of bigger, larger agencies backed by PE firms or whatever acquiring a lot of agencies? Or do you see agencies like me coming in, 4 or 5 years in, acquiring agencies? And have you seen one or other take off a lot more in the last couple of years?
In our market, we're strictly Midwest. I think the people who are independent agents try to hold their agencies close to their heart, and fend off offers from those bigger entities, the private equities out there. You might find it more on the coasts,
Okay.
Florida, California, New York area. But here in the Midwest, they want to keep it local, and they want to know that the person who's coming in and taking over their clientele is going to keep treating them the way that they have been treating them for the last 30, 40, 50 years, whatever it's
Mm.
been. So I haven't run up against the private equity, big business coming in and eating people up like I've seen just a regular independent agent acquiring another one. That's
That's
been more
really
prevalent.
That's really good to hear. So if you're an
Yeah.
insurance agency owner, producer, you're looking to go do some acquisition, like I would encourage you to reach out to a lot of those people. I guess if you're in the Midwest, and it's really difficult for somebody that's in California trying to buy an agency in Nebraska, for example, because that Nebraska agent's going to be like, dude, I want Cyrus that's over here that's going to treat my people right, that's here locally, and all that stuff is what I'm
Right.
imagining what's
Right.
happening right now. So I guess from a business standpoint, like what can, and I know some of this could potentially fall into the repetitive, but I really want to make sure people understand what what to make themselves attractive. So for a buyer to make themselves attractive, like they want to go buy a bunch of agencies, but they want to be a really good candidate. Other than obviously getting their financials get to a point to where it's very healthy, like do you have any recommendations, like out of the box recommendations, like hey, go start hanging out with the big eye or something, start making friends in the independent agency side of things, because maybe you'll be the first one to get that call, or have some carrier relationships. Those reps, they talk to them all the time. Like any out of the box recommendations for independent agents?
Yeah, we're a huge member of the Big I, as well. PIA Minnesota, we're a big member of, a big member in IAAW in Wisconsin as well. So I think those are all great resources. Get you in front of those other independent agencies and find out. However, I have found that a lot of people who are looking to sell their agency are keeping it on the down low, right?
Mm, yeah,
So they
yeah.
don't want the people, their customers, to catch wind of it until it's golden. So they don't talk about it a lot. So there is, some other entities out there like Sunbelt Business Advisors who will who will list agencies
Yeah.
for people and kind of keep it hush hush. They'll keep their names off of it. They'll do all of this. So even signing up for newsletters for some of those business advisors that list selling agencies, also a really good idea. So as soon as they pop up on the market, something that you can look into.
Uh, no, I love that. That's definitely a great advice. What would be a lesson, I guess, you have learned over the years that you wish like more borrowers understood? Is there one that comes to mind?
Um, I got a lot for startups.
Uh-huh.
Um, like it's not as easy as you think it is.
Yeah.
But I think just go in with your eyes open.
Yeah.
Keep your finger on the pulse.
Yeah.
A lot of times, especially when it comes to the insurance agent or industry, Cyrus, you guys grow so fast.
Mhm.
Sometimes you get a little, okay, well, I'm going to live in Florida for 4 months, right? And you got to keep your finger on the pulse of your business. Keep your eyes on your financial statements. Make sure things are always where they're supposed to be, and make sure the people who are handling those are trustworthy. I always say it's really important for you to have a key, like your key partners, right? Which is a good CPA or accountant, a
Mhm.
good banker, a good insurance agent like yourself,
Mhm.
and a
Yeah.
good attorney. So as long as you got those four things in your pocket and you're keeping a pulse on your business, I think you're going to do just fine.
Yeah, that's awesome. Hey, I want to talk about the future of acquisition lending, like 2025, 2026, 2027. Um, I'm curious on what you think, first of all, like the role of technology. Does it have an influence in acquisition loans?
From a banking perspective, I don't think so. I think from your guys' side of things, right, technology is really coming into play. And we from a community bank,
Yeah.
right, who's dealing in this in multiple states, probably will need to jump on board and figure that out going
Mhm.
forward. Um, but as far as if it will affect what we're doing from our perspective, I don't think technology will. Obviously, if you fall behind the times, you're not going to be as attractive,
Correct.
right? So stay abreast. But
Yeah. Talking on that, like, do you think agencies that have I don't want to call it like better technology, agencies that are maybe are more technology driven, do you think their valuation potentially could be higher? From a bank standpoint, like, would you guys, for example, our agency, like, we have our own rater system, we have our own chief technology officer, we have a developer on staff that, like, all, because we have a technology company, so all of our systems and processes are like integrated and interconnected, so we don't have to go to 7 different places to like do an insurance policy because we have tech in place to make everybody's life easier. Would an agency like mine be valued a little bit higher than another agency that is not, potentially, from a bank standpoint? Now, I know in the insurance world standpoint, that's an absolute yes, but like from bank standpoint, does that change your perspective?
the fact that you're utilizing it just alone, I don't think that makes a difference. However, because you're utilizing those systems and utilizing that technology and able to streamline your processes,
Mhm.
you're able to generate more business than somebody that isn't, correct?
Yeah.
So it may not be a direct effect on your value, but it definitely is a strong indirect value, effect on your value, because you're generating more income because you're not having as many people have to touch something.
Correct.
You're getting more customers through the door. So, I just don't think it does it directly, but definitely indirectly.
Yeah. Well, I mean, your revenue is going to be a lot higher, and that's
Correct.
we can grow a lot faster because we have those things in place versus an agency that really don't.
Right.
I wasn't sure if the evaluation people would see that. They don't even see that, obviously, because they look at a book of business when they're evaluating this. They're not really looking at what technology do you use and all that stuff. So let's talk about prediction, Krista. What's your prediction for the acquisition market in the next 5 years?
Honestly, I think we're going to start seeing an uptick. It kind of slowed in 2024. We were on a big like upward trend in 2023. And it kind of slowed in 24, but I think we're going to see it rebound again in 2025 and 2026. And the reason I say that is a lot of our independent agencies have been started or are owned by people maybe baby boomer age,
Hmm.
and they're looking to retire. At this last event I went to for the Big I, you know, a lot of kids, a lot of their children are taking over their agencies.
Yeah.
And I think that's interesting. That doesn't happen in a lot of different industries, right? And so, as the parents want to move on, maybe buy their place in Florida, buy their place in Arizona, they're going to need that capital to be able to do that. So I think we're going to see, from a lending perspective, a a larger amount of loans coming through, but also from an opportunity perspective, for people looking to acquire. So I would say start setting yourself up now to put
Cool.
yourself in that position to be able to acquire, because when they pop up, I think they're going to go fast.
I think so as well. I want to come back to the to the dad. A dad has an agency, the son taking over. Are you seeing, or obviously that's going to happen? Are you seeing those acquisitions being under the son's name? Are they going through the whole process of like the son buying the agency and doing it with you, or how do you see the transition there?
A lot of that is happening where they are slowly transitioning certain percentages of ownership until
Okay.
it gets to a point where the child or the children are at a certain percentage of ownership that their equity is high enough that they can go ahead and then buy out the remainder of the equity of the parent. So it could start three years in advance. And if you're looking to get out of your agency, you're looking to move on, I say that's when you start it. 3 to 4 years in advance, start slowly transitioning some ownership of your agency over to whomever it is that you want to be your successor. Because then in that 3 or 4 years, when you're really ready to be done, they're in a really great position to be able to buy you out.
Yeah. Yeah. No, that completely makes sense. Do you see 2023, 2022, where things were amazing as far as acquisitions go, and people were getting like 5x revenue, 6x, and all that stuff, crazy stuff happening. No, I don't think we'll ever get there. But like, do you see 2025, 2026? When do you think we will be back in the or are we ever going to be back into the 2023 again?
Gosh, I don't think we are. Not only talking about from that kind of from a multiplier of revenue or multiplier of EBITDA, whichever one you're using, perspective, but also not from a rate perspective. I don't see the Fed rates being zero for that long ever again in our history. But of course, I don't have that crystal ball. So I think it was an anomaly that time period, and I think we're going to get back to what's considered the norm, right? Which is a 2.5, 3 times multiplier from an agency perspective. And I think that's what we're seeing when it comes to valuations too.
Yep.
So I think that's going to hold pretty consistent.
That's awesome. Is there a number that you see that after an agency is at, like, let's say 5 million in revenue, and they maybe have a good mix of like 70-30 commercial, personal, whatever the math makes sense? Is there a number of, when it comes to like a number of like a revenue from that higher that potentially it could be, or no? Like, if somebody's over 5 million in revenue, do you see their EBITDA or their multiplier being obviously a lot higher than somebody at a 1 million in revenue?
A multiplier based strictly on the amount of revenue going over a certain threshold, making the multiplier jump up.
Yeah.
Kind of like tax brackets, right? Yeah. You make too much money, now your tax bracket went up.
Right.
I don't know that answer, Cyrus. I'm going to be honest, but I don't see that happening.
Yeah.
Just because you make more, obviously your EBITDA is going to be higher, but that doesn't mean that the overall value of your book should be multiplied any higher than anybody else. My perspective, I don't do the evaluations, so I don't know that.
She's on the bank side. Leave her alone. Agency and producers are like, "What are you talking about? I want a higher valuation." She doesn't do it, guys. She just gives you the money. She just does everything else to get to know you and give you the money. Krista, I know we only have a couple of minutes. Is there anything else you want to share from a lending standpoint, from a security financial standpoint, from a Krista standpoint? Anything that you want to share with all of our listeners today?
If you're gonna go down this route, just make sure you're able to trust whomever it is that you're going to be working with. Make sure they look you in the eye, and you're going to believe that what they tell you is they're going to be able to come through on. And it's okay to have a banker that is also a friend. Make sure that you trust that person. They're holding your ability to grow in their hands. So don't just go forward because that person's sitting across the desk if you don't have a good gut feeling.
That's awesome. So Krista, how can people reach you if they are interested in having you look at their financials to see if it makes sense, or if it's the right time, or if they have an agency, everything in mind, and they obviously want to do business with you? How can people reach you?
Yeah. So we have our website, which is www.s as in Sam, F as in Frank, bank.com, sfbank.com. Can also reach me directly at Paulus, Paulus, at sfbank.com. Or my direct line, 715-790-0622. Not afraid to give it out.
That's awesome. Hey guys, Krista, thank you so much for being on, and certainly appreciate all the wisdom. And everybody, please call Krista if you're looking. And we certainly appreciate everybody's time. And Krista, thank you for your time.
Thanks, Cyrus. Enjoyed it.